Let's turn our attention to the Kenyan markets and see what's been driving them on the day. Just looking in on the blue chip NSE 20, of course, we saw a strong run last week. So looking at the numbers so far, it looks like the market has still been bullish for the day, turnover around 500 million shillings. And overall, as you can see, posting a gain of 0.5%. And a quick check-in on how the currency is faring. Of course, it is all around concerns around the impact of the upcoming election. It has strengthened slightly against the greenback, as you can see there, 87.37 as it stands this hour. Let's delve into some of these issues right now. Joining us from our Kenyan studio, Kenneth Minjire, fixed income analyst at Stanlib Kenya. Kenneth, thanks so much for joining us today. So let's talk overall about the bond market and what you're seeing in terms of flows, because we know on the equity front last week, foreigners really dominating the equity market, strong inflows into equities, and foreigners really driving up that bullish trend. The same true on the fixed income side?
No, not really. If you look at, for example, today the market did a turnover of about 320 million. Which is minuscule compared to what we are used to of turnover of an average of about 3 to 4 billion per day. And we've seen these numbers hold for most of February and actually from mid-January. Despite the heavy maturities coming in, we're actually seeing very little secondary market turnover. And I think I'd attribute this mostly to uncertainty on the direction of rates. I think when we began the year, most of the market was quite sure that we'd see a downward trend, not so aggressive as we saw in 2010, but it would be a general downward trend in rates. But as the year progresses, I think some are beginning to be not quite sure, because if you look at the prime rates, interbank repos, all the rates actually are telling a different story.
Where do you see the biggest pressure point on rates right now? I mean, because there are so many push-pull factors, of course, as the central bank has tried to remain accommodative, but rates really appear to be sticky on the downside.
I think the biggest pressure point is coming through the repo market. We're seeing a lot of upward pressure, and we've seen that the repo rate has become quite an important indicator for investors in the market. So this actually usually precipitates the rest of the short end moving up. For example, today the repo rate touched 9%. And as we go this week towards 91 and 182-day T-bills, we should also see this will also be translated in the bidding behavior the market will display for the primary for this week. So I think a lot of pressure is coming as the government tries to mop up shillings from the market. But a good thing is we've also seen a bit of support coming in, as you mentioned, from foreign flows in the equity market. Like, for example, last week they did about 4 billion, which is roughly about $46 billion. If you take about half of this, maybe about 50% being foreign inflows, that's about $25 or $25 million. So this seems to have supported the market as we closed the week, together with the aggressive repo on Friday. And as you mentioned, the shilling has basically traded flat compared with where we closed on Friday.
Now, looking at Treasury's borrowing requirements for this year, it has raised, in fact, that target by 31.6 billion shillings, and indicated it's really the fact that tax collections have been worse than expected, the reason for that. What are your thoughts on that number? How significant is that? And where do you think Treasury might be able to issue that debt, in the local or foreign market?
So far, with Treasury is actually, CBK is actually ahead of Treasury's targets. They've collected about 95 billion. So 31 billion, considering where we are, does not look so difficult. I think the biggest challenge will come through because of the high amount of maturities we're expecting in the first quarter. The first quarter may actually close in a net repayment position. So we may see some pressure from central bank as they try to bridge that gap in the second quarter of the year. So yes, we might feel a bit of upward pressure on the rates. There's also talk of issuing the Eurobond, although I think this will most likely be after the general elections are held. Basically, if they go through smoothly, we should expect a lot more interest from foreign investors, and rather than doing it before the elections.
Interesting that at a time prior to the election when there is so much uncertainty, they're looking to raise 15 billion shillings through that new bond that was launched last week. What are your thoughts on that and the type of interest that might be out there at a time where there is so much uncertainty in the market?
I think because of as I've keep mentioning, the heavy maturities we expect in February of about 50 billion, most of this money will be looking for a home. And they're doing a 2-year and a 15-year bond for this month. We should see immense interest in the 2-year paper. Basically, we've seen a lot, and what happens is investors move towards the shorter end when there's a lot of uncertainty in the market. So I think, yes, there will be immense interest in the 2-year paper. We should also see quite a bit of interest from pension funds and insurance companies in the 15-year paper. They'll be looking at levels of 13% and above, which for a 15-year paper is quite attractive.
Mm-hmm. Let's talk about the shilling for a second, because there was a lot of speculation around speculators and currency speculators last year and the previous year when the shilling weakened quite dramatically. What are your thoughts on the role that currency traders still play in the market right now? And do you think that you could see the shilling worsening from here?
No, I think the market is a bit different. CBK implemented quite a number of controls early last year, towards the close of actually 2011 and early last year, which have had quite a positive impact on the market. So I don't think speculators will play such a big role as they did previously when you saw the shilling run away and touch highs of about 107. And of course, as we move towards elections, we should see, I do expect us to see a slight weakening, but CBK seems to be very alert. They seem to be protecting the shilling quite aggressively. And as we've mentioned, the elections are coming up. We're still seeing immense foreign inflows, which we expect to still continue supporting the shilling together with central bank open market operations. So yes, we do expect a weakening, but not anything aggressive. Quite, I would say, marginal weakening as we move towards elections, anywhere below 90.